This video is the next in a series looking at housing in the UK, and it follows on from a video looking at how many houses there are in the UK and how they are owned or rented. If you haven't watched the first two videos, please check them out first. The title of this lecture might seem odd. Why would architects need to know anything about the mortgage market? Aside from the fact that one day you might need to buy a house and a mortgage might be part of that process, there are certain aspects about mortgages which could impact on how buildings are designed. I'm not going to go into details about types of mortgage or rates, and I'll offer a big disclaimer here that I am not a mortgage advisor, I am an architect, so nothing I say is advice. So now that that's out of the way, let's look at what a mortgage is. As we've seen in previous videos, it is the minority of people who are able to afford to buy a house outright in cash. The average house price is around £230,000 in the UK. Fine if you've got that sort of money lying around, but most of us have to find another means of obtaining the funds to purchase a property. A mortgage is one way of borrowing that money. Fundamentally, it is a loan from a bank or building society which is provided to a homeowner in return for the title to their property. This loan attracts interest, and the borrower is usually required to pay back a chunk of the loan and the interest every month until the debt is paid. While the mortgage is being paid, the bank is effectively a part owner of the house or property. If at any point the borrower defaults on payments, the bank can foreclose. The bank can take possession of the property in order that they can recover the balance of their loan. All going well, at the point of the final payment, the title then returns to the property owner, and the lender or bank has no longer any hold. Those first 2 points are the key aspects that architects and designers need to note. While the mortgage is in place, the bank has a vested interest in keeping the property safe. They don't really want anything to jeopardise their investment. If we rewind for a second and look at the process of applying for a mortgage, we can imagine that the bank might have the same concerns about the types of properties they might lend on. It would be very foolish for a bank to offer money to a borrower if the house it was secured on was a risk to their future return. That's the point where you as architects or designers should become interested. Most lenders will only lend on properties which they are sure will give a return in the case of a default. So banks and building societies prefer buildings which are made in certain ways and use certain materials. Lenders are looking at loans in the long term and want to be sure that if they need to take over a property and sell it to regain their investment, that the type of construction isn't one which will cause them problems. To avoid this video being too long, we will cover aspects of standard and non-standard construction in the next lecture in this series. Please have a look at some of the links in the description and the links in the end screen. If you get any comments, please feel free to post them. Just so you know, comments are moderated so I can keep them relevant to the content. So thank you very much for watching, and be sure to watch the next video in the series.